Welcome to the Altcoin Hour, your weekly alpha. Yeah, we breaking down the charts, flipping bags, playing smart, from the dips to the moon shots, connecting all the dots. Let's get it. Altcoin Hour.
All right. Hope everybody's doing very, very well today. Welcome to the show. Another hand clap for a Tuesday. Let's go and get that hand clap again. It's a crazy day. This is crazy. We're going to get into the market, and the main focus, I got to take the music down a little bit. The main focus here is going to be the Clarity Act, because what happened with this markup, and I will tell you, when it comes to the Clarity Act, if I can find the actual mic, where is it at? Okay, so I hope everything's good with the mic now. I need to get this music down. It's a little bit too loud. The Clarity Act markup, because honestly, I don't think it's going to actually pass. I really don't. I could be wrong, but I don't think this thing is going to pass. So, and the banks are actually, they're looking at it today. Now, I'm having a hard time finding my volume for the music here. So let me see how, there it is right there. There it is. Okay, so I got it. So $69,000 for the Bitcoin. We're going to get to the market. I was a little disheveled there because my sliders are different. They look weird. I did an update on OBS and everything is crazy. Welcome to the show, Selma Fo. What's going on, brother? What is it? Gertie, what is up? So we got a lot to get into. I want to really get deep into the Clarity Act because there's a lot of misinformation going on. Yield didn't go anywhere, but it's a different animal, right? The actual yield, when it comes to stablecoin yield and other synthetic token yields and DeFi protocol token yields, that didn't go anywhere, but it's been repackaged, right? And there's some things that you're gonna have to do differently to actually get this yield. It didn't go anywhere, Now, the traditional way of getting yield, that's probably gonna go away. You can't just put it in your wallet and hold it and get it for nothing. There's gonna have to be some activity, some movement. So we're going to get into it because a lot of people aren't explaining this correctly on X. Okay. But I'm going to give it to you straight. All right. Yield is not going anywhere. In fact, I think this new markup, this new language, the way that it's packaged, I don't think the banks are still going to go for it because yield didn't go away. It's still there, but they kind of like it's a different animal. So I think the banks, they don't want any parts of, that being available, no matter how it looks. So we'll see if they go for this. I think it's bullish. I really do, because it's not only going to make the market safer, it's going to change DeFi application activity as well, and it's going to change Uniswap. The actual build, the actual current way Uniswap actually works and moves. They're going to have to change some things. And a lot of people copy Uniswap's model. So, there's a lot of exchanges out there that copy that model. They're going to have to pop the hood, and they're going to have to change a lot of things. Okay. So, a lot of these crypto companies are going to have to be permitted to offer these actual services too as well. So, if, the languages are going to make the safe space, or it's going to make it more professional. I actually like it, but, I don't think Trump's going to like it either, because it affects the way USD1, the actual stablecoin that's in the World Liberty Finance, platform. It's going to affect that greatly on how that moves, because there's yield there too as well. Now, there's a beneficiary. I think Ripple is going to benefit greatly from this, because they're going to have their bank charter, and they're going to be able to place RLUSD, and they're going to be able to set those yields within that banking system that they're going to be building up, with that charter. And I think everybody is going to be running to that. Once that gets, once everything goes, everything gets, ironed out, the foundation set, I think Ripple is going to benefit from that. And I told you guys almost 2 years ago that I believe that RLUSD is going to flip USDC. I still stand by that to this day, because what I'm seeing with USDC and what I'm seeing with Circle Stock, they're not liking what's going on. So I'm going to get into it. We'll get into what is banned and under the new language, what stablecoin activity, how it's going to look like, and what the yield is going to look like, and I'm going to give you some examples, because it's just not being explained like it should be, like I think it should be. A lot of people are engagement farming, getting likes and views, and it's just not really telling the truth about this new markup. So, and the banks are looking at the language right now. So we'll see. We'll try to get this to Trump, before April. So, I don't think they're going to be able to do it, but it is what it is. Let's go ahead and get into the market, and then we'll get into some. I think some people are in the chat here. Let me check out. Let me see what you guys are up to. So, Gertie, what's going on, brother? Whoever's in, you got 14 viewers here. Welcome to the show, guys. Hope you guys are doing very well. Let's get into this market report, and then we're going to jump knee deep into this Clarity Act, because this is what you need to know that you're not getting on X. The actual nuances, because I actually like you guys. So let's go ahead and get into the report. So here we are. Now let's start with the grandfather. And by the way, what's going on, Sir Shields? RWAs are really ticking up. I was looking at the DeFi Llama, and I was looking at the RWA traffic. It's getting really close to 18 bill when it comes to market cap. And a lot of it has to do with real estate, fractionalized real estate, which has been in the system for like 4 years. So the tokenized real estate is not new. The fractionalized real estate is not new, but I'm seeing a lot of RWAs that are starting to percolate. We're going to look at that chart because RWAs are soaring. It's moving. We just don't have a lot of facilitators. We don't have enough facilitators for it, right? And what I'm looking for is a facilitator of tokenized assets that can combine all of the formats, every single iteration of an RWA in one actual marketplace. Whoever builds that, they're going to win. They're going to win so much. So let's get into the market. BTC, $69,000. It's being affected by not only geopolitics, okay, but outflow, ETF outflow. It's been pretty tremendous on the BlackRock side. Michael Saylor has bought a lot of Bitcoin, and you had Tim, the Ethereum of Wiz. He's bought a ton of actual ETFs as well. So you're having the institutional buyership, but it seems like the whales keep dumping on the institutions. I'm seeing a large amount of BTC whales, OG whales that they're crushing the ETFs. They're completely crushing the ETFs. So, we're still above, 65, which is where we need to be. But when it comes to geopolitics, you have the crushing, the OG wallets. And I'm talking miners too, guys, because everybody talks about OGs and the OG miners and the early adopters. The majority of that group are miners, guys. They're the miners. These are the early miners. These are early guys that plugged in and start hashing. So they got a ton of Bitcoin to sell, and they're not making a lot of money. Okay, they're losing money. So a lot of these miners are actually cashing out, along with the OG wallets too. There are, OG wallet holders as well. The faucet guys is what I like to call it. They're in the actual market too as well, selling the Bitcoin. You have countries too that are selling Bitcoin, private holders. We saw the Winklevoss twins. They sold a lot of Bitcoin recently as well. So you have a lot of that going on, and you combine that with the geopolitics. It's just everything is going bananas in the Middle East. So we have a lot of manipulation too as well. We saw what happened with Trump with the announcements of negotiations. We had that happen again today, possible negotiations. So we'll get into stocks in a little bit too. Just a brief flash into the stocks, because the bond market is going bananas again. That's not good. So all of this is weighing heavy. Now, what's very interesting is the gold and the silver, the metals department, and how that is reducing those particular price points are reducing. A lot of metal is being rotated into Bitcoin. It's a really crazy market right now. And the way the stocks and the metal markets and commodities markets and cryptocurrency markets are actually combining and conjoining, and you have this two-way action here. A lot of it is going into Bitcoin, but at the same time, miners and the actual OGs are actually selling, so a lot of the institutional inflow is exit liquidity, literally exit liquidity for not only the miners and not only the large holders, but retail as well. So I think if you really, combine all of this, it's a circle jerk, but it's decent because it's keeping Bitcoin back, above in the 70K, kind of averaging in the 70K mark, which is great. We don't want Bitcoin going down to 59. If Bitcoin goes down to 59, what do you think the alt's going to do? They're going to crash, right? So, and I'm talking about even the substantive ones, it's just the way the market moves. Bitcoin dictates movement. So let's go ahead and move on into the actual bulk of the actual altcoins, because you do see a lot of red, guys. Ethereum, it's still above 2K. And I think, I think Vitalik is done selling. I think a lot of the OG ETH, holders, they're done selling. I think some of them are just really fearful of what's going on geopolitically. So, and then the oil prices were moving up. That was affecting flow too as well. And then there were some bearish, notions when it comes to development. I don't worry about ETH. I just do not worry about ETH. It's going to be okay. I never worry about it. But a lot of people do. And you have a lot of long-term stakers as well. When it comes to these OG holders, they're going to move whenever they see fit. If they get fear selling, they get the itch to sell, they're going to sell. You got people that are, buying these tops and they're getting crushed. They're going to sell at a loss. This is just the nature of the market. By the way, the RSI is at 46, so we're kind of moving towards the oversold mark. So that is interesting as well. We'll look at that chart because I think that is interesting. I was thinking we're probably going to stay in the 50 range, but looks like we're moving into the oversold territory, which is very interesting to me. Tether. Now, we did get a decouple in a stablecoin, a pretty decent stablecoin decoupled over the weekend. And there was some actual manipulation there, big time manipulation within that protocol that caused that decouple. I think it actually recovered, but moving on to BNB, Tether's got issues, guys. I don't even want to go into that. That's a whole nother deal. They're going to have big time issues if the Clarity Act actually passes. This new actual language that we're about to go into, if that passes, Tether's done. I'm sorry, especially in the US, they're done. They're having issues with MiCA, with the European language right now. So, when it comes to this Clarity Act and this market structure bill, if it passes as we know it right now, Tether is toast. In comes RLUSD. I'm telling you, this thing is going to rocket ship up there into the top 5 very soon. XRP, $1.38. XRP is fluctuating with the market as well. Everything is fluctuating with Bitcoin. Almost 10% down. XRP lost a lot of headwind, but I'm not really worried about that. Solana was trying to get back up to $100, but again, the Bitcoin slide down actually is moving the alts down. This is how it goes, So we have Solana, $88. Tron is actually up $1, which is crazy. I don't know what's going on with Tron. Maybe Justin Sun is pumping it again. I don't know, but Tron is actually showing some upward trajectory. I think it was at a low. Last year low was 23 cents, I believe. So, from 23 cents up 31 cents. It's decent growth within Tron. I don't know everything is going to get to $1 because it's being heavily suppressed. And I just don't know. I don't know anybody who uses it, the protocol. I really don't. I'm pretty sure there's a lot of uses there, but I talked to people about TRX. Some people don't even know what the hell it is. And it's been in the space for a while. So that tells me a lot. Dogecoin 9 cents, Hyperliquid 30. I'm trying to get up to $40. Hyperliquid is a beast. Those oil futures, this thing is a beast, guys. This is going to easily go over $100. Post language, post all the actual tumultuous activity, post Gulf War. This thing is going to be over $100. We just need to get to that bull market, and we're going to see a lot of these just soar. Post language, we just need the bull. We need the bulls bad. We need a lot of the shit that's happening geopolitically to calm down. We need language. And then a lot of these alts are going to come back. Just hang tight. All right. You're getting some dips though. You're getting some really good buying opportunities. Just be careful what you're buying because a lot of these altcoins, a lot of these protocols, post language, they're going to go away. Because a lot of the devs are not going to want to KYC. They're not going to want to put up with monthly audits. Okay. Monthly oversight. They're going to say to hell with this shit. I'm out. And they're going to disappear. So they're not going to want to KYC either because it's going to be a formal KYC, So only the real devs are going to actually step up to the plate. The ones that don't mind you knowing who they are. The ones that aren't going to hide behind Telegram walls and X pages. Okay. And profile pictures. The real ones are going to come out and say, hey, this is who I am. I built this project. I am your dev. I'm a trustworthy guy. This is my face. Fully doxed. Let's go. Those are going to be the real guys that are going to be coming up in this space. Post language because they're going to have to dox. From what I'm looking at now. Bitcoin Cash, $473. This thing needs to get back up to 500. I remember my boys said buy this when it was $210, and I should have because that was a nice flip. That would have been a nice flip. So, I need to start listening to Jay. He's been getting this shit right. So Cardano, 26 cents is looking. I still love Cardano. It is down 10%, but I love Cardano. It's not too fast, not too slow. It's just right. I think that's the tagline going forward because I think that thing is going to be heavily adopted post language. So you have Leo at $9. Chainlink is trying to get back up to $10. All of these alts are down, and it's because of the climate. The majority of these ones that are down is not because it's a lack of development, it's not because there's a lack of lackluster performance. It's not because the actual infrastructure, the ecosystem, the chain, the mechanics are lackluster. That's not it. It's just it's very, very bad climate for everything right now. Okay. It's so bearish because of the climate. Now there are some bum, devs out there that have deployed bullshit. Let's be real. And those projects are suffering right now because people are starting to pull back the curtain and they understand there's nothing there. So they're moving out, right? They're going into some substantive, investments. You're going to see those die, and you're going to see a lot of red in those. But particularly a lot of these that are red, they're still good, guys. The climate is just really, really bad. So, and it is what it is. You got to ride this out. You got to buy those dips, especially if you know there's substance there. XLM, that's going to be a big deal. It's 16 cents. Everything is down. Canton is one of the newcomers. It's down. It was doing very well. It's down. World Liberty Finance, which is going to be heavily affected by this language if passed. It's even, which is crazy. It's still under $1 though. LTC, this thing went over $100 last year. It is 50% down. I still love Litecoin. I think it's gonna have its place. It's gonna play its role in the future post language. Post all the BS. AVAX was actually delisted off Binance, and I saw a lot of delisted coins over the and I'm pretty sure you guys saw that post over the week, over the last couple of days. Binance is delisting a lot of not only shit coins, but reputable chain coins that have been delisted. And I saw AVAX on this list, and I was like, what did AVAX do wrong? What did they actually do wrong? I'm not understanding why they're being delisted, but I need to look into that. It's $9. As far as I know, AVAX is still, the dev team is still, prepped and ready for the bull. And not only price, right? But I'm talking about bull run. There's two different aspects of a bull run. There's obviously a price rush, upward trajectory within the bull rush, but there's also an adoption rush when it comes to bull run activity too as well. A bull run of exposure, a bull run of adoption of technology, a bull run of price as well. It's actually three-pronged, but most of you are only worried about the price, and I get it, man. There's nothing wrong with just being in the market just to make money. We're not going to excoriate you for that. I get it, but the tech is beautiful. And I think longevity, long-term investments, you better be in the tech. Because for me, and I always say this, that's where the life-changing money is. You want something that's going to actually be here, not only 1 or 2 years, or not only 15 minutes, but you want something that's going to actually churn, profits multi-yearly, 4 or 5 year, plan with your portfolio. You want to retire. So the technology is where it's at. Now you're going to get the memes that are going to make people millionaires as well. Just like one recently I seen two today, $1 million, almost $1 billion market cap is crazy, but they go down very quick. So you got to be careful. You got to move. You got to shake and move with the meme. So H bar 9 cents. I'm seeing a lot of negative stuff about H bar. I don't know why everybody's so bearish on H bar, but I'm seeing a lot of negativities. Maybe somebody can tell me what is going on with Hetero. Why is everybody so upset? What happened? I don't know. I'm not into the TGs. I've been trying to figure it out. Why is everybody so pissed off about H bar? It is what it is. Welcome to the show, guys. We're about to get to the Clarity Act because, man, we really need to clarify the Clarity Act because there's a lot of BS out there on the Act. So, and we'll stop with Zcash. I told you guys, Zcash is going to go down to the original low, and it's headed that way. It's down 18%. I think it's one of the biggest losers. Let me go up. I think when talking top 25, Zcash is the biggest loser, and that's unfortunate. This thing went up to freaking almost $800. Tim says, I'm really feeling bullish. We are so lucky for these opportunities. You're right, Tim. Lots of buying opportunities with reputable blockchain communities, reputable blockchain devs, reputable ecosystems that are going to be like going bonkers, man, post language because they're built for it. Canton is one of them, especially if you're dealing with, I think Sue just did an upgrade too a couple of months ago, Sue Chain. Love and Monad, can't wait to see what the pod devs are going to be doing with that new iteration. They just pop the hood and just rehaul that whole situation. So can't wait to see what the formerly known as pod chain situation looks like. We got a really nice blog coming up that's supposed to divulge some fantastic information, really give us some really good information going forward. Really excited about the next blog. So there's so much tech that's actually being built on the fly, right? And JT says not many opportunities. Yeah, you really have to do your homework because there are some duds. You're right, but I got to tell you, there are opportunities, but there are duds in the middle. You got to find those diamonds. There's always roughage around the diamond. You have to mine it. You have to get the roughage around it. You have to go seek for it chisel through the roughage, and then you'll find those diamonds because they're there, and the prices are great with these particular diamonds. But yeah, just to wrap this up, you have Bitcoin pulling in a lot of reputable altcoins, guys, right now that are decent. And then you have Bitcoin that's actually pulling back the curtain and saying, hey, these are the ones you better get out of because they're not coming back. You know what I mean? So you have to be very careful. But all in all, as we, close with this, and we're looking at this relative strength index, again, a lot of people are still in the middle. We're teetering towards oversold territory, not by very much, but people are still holding. People are still confused. Do I buy these dips, or do I sell, or are we going down even further? A lot of people are stuck in the middle there, and I think that's the perfect place to be, because if you do your research, you'll see where you need to go, especially if you really do your research very well and you know where this market is going. Tokenized assets, RWAs, look for those facilitators. They have a great price points right now. Make sure the dev team is still there. A lot of devs are giving up because of this language that's coming out. So, buy those devs, man. You know what I'm saying? Do your research, because there are opportunities there. And you can see a lot of investors. Just look at this chart. A lot of investors are in the middle. They're confused, and rightly so. They should be confused. A lot of shit is going on. But if you do your research, you got to know exactly what to do with your money, because this market is going up. It's definitely going up. We just got to get through all of the bullshit. We got to get this language passed. We got to get clarity to these devs, whether they like it or not. A lot of them are going to use this clarity, post language to get the hell out of Dodge. They're going to go, there's Vamoose, they're going to fucking go incognito, because they're not going to want to do what this language is going to be mandating them to do. It is what it is, and it's their choice. I think it's going to weed out all the bullshit. That's why I love it. It's about time. Real devs are going to stand up. Real, ecosystems are going to shine. Devs that don't mind KYCing, letting you know who they are, seeing their face, they're going to shine. They're going to win, because people are going to trust them more, and they're going to partake in the ecosystem more because they trust the dev. They trust the team. They know the team. They're doxed. So that's you got that in the stock market, in the real world. And I think that allows for more buyership, more usership, more investorship, when the investors and the users are actually solidified in their trust. Trust. That's what it's all about in this space, especially when it comes to the tech. I want to trust that you're going to, take care of my money. I want to trust that when I use your actual protocol, I'm not going to lose any money, right? It's solid, it's secure. Trust across the board is what's needed, and you'll prosper. And you're going to have to abide by the regulations, because it's coming regardless. So that is the market, guys. We're going to be moving sideways with Bitcoin. Let's just get used to it until everything calms down. All right. When it comes to the actual ETF situation, we're up. We're up, especially on the Bitcoin side. We're up. Ethereum is bleeding just slightly. $17 million negative outflow, but ETH is going to be okay. So let's go ahead and get into this Clarity Act situation, because I believe what we're seeing here is a phenomenal development. And I want to get into what you need to know, because yield is not going away. It's just a different animal. All right, let's get into this breaking news. So when it comes to the yield, we did get the passage. We finally got passage. These stablecoins, and I want to omit algorithmic stablecoins, just in case you guys didn't know, they're done. They're toast. Algorithmic stablecoins are toast. And there are still some actually functioning right now, but post language, they're already done overseas with the European language. They're illegal, essentially. They're going to be completely toast, officially toast, in the American market under the Clarity Act market structure bill. Good afternoon, LMFG. I need to check if you're back there. I don't know if you're back there, but you have to understand, guys, this is going to allow a lot of the solid, reputable, very secure stablecoin technology to rise to the top. Okay. Like Circle, Paxos, they do great work, right? There's others that we don't know about, that we don't use, that are non-algorithmic, that are going to be great options as well. And this is what I love. There's going to be diversity, big time diversity when it comes to this. So I want to get into the Clarity Act, and I want to get LMFG up here. Welcome to the show, brother. Can you hear me? Welcome to the show, brother. I hope you're doing great.
Welcome. Yeah, man. Rocking and rolling.
Man, what's your take? Hey, go ahead. I'm sorry. What's your take, man, so far? You know, we did do it. We wrapped up the market report. But as far as the market report, Bitcoin, the altcoin movement, what's your take, bro, before we get into this clarity?
Yeah, I got my son over here. He's, doing the tires, the oil and all that. He was like ready to buy some stuff. I was saying, oh, wait. put some limit orders and chop everything by about 10 to 15%, you know, and maybe you hit.
Yeah, welcome to the show. I'm going to give a hand clap to you, bro. Welcome to the show. Yeah, man. And welcome to the JR. What's up? How you doing, brother? Welcome to the show, guys. We're about to jump into this clarity. Guys, you're getting a lot of misinformation. We're going to jump into the actual requirements for yield too, because we're going to give you some examples too that actually exist in the real world that I think they're going to copy and paste into this language when it comes to the actual what is it, CCFT, the SEC, and then the Treasury. They're going to be coming up with rules. They're just going to copy and paste what's already existing in the real world. And I'm going to explain this to you. I think it's fucking amazing. I think it's cool. It's just so cool. A lot of influencers on X, they're bullshitting you. They're not telling you how cool this is going to be. I think the yield, I think these rewards are even more, they're better than just holding it in a second, just getting just basic 4%, because you're going to be able to get more many different ways, but there's going to have to be some activity. And I'm going to introduce a term too that's going to come up too, because I believe this is going to be the new term going forward, because these protocols, these SECs, they're going to make way more money, service money, when it comes to the new, new animal of yield. So, but what's your take, bro, before we get into this? I know we're talking about this markup, this new compromise. We're going to get into it. Before we get into it, did you see, the preliminaries, and what's your take? Are you bearish? Are you bullish? You think we're finally going to get passage, by April? What's your take?
Yeah, I think everybody's missing the point of the clause in there that the president and all of his family can't touch crypto.
Right.
So World Liberty Finance would have to go. I don't know how that's going to work. I don't see this thing passing. I say he vetoes it, or guys, and I'm not sure. I'm a little behind the times the last 2 days, but they just dumped like 1.5 billion.
Which one? Oh yeah. They've been. I think they cleared out Molina finally, which I think Molina got listed on Aster. So that was not good for people who were partaking with that particular pair, because they got cleaned out. And I think Trump Coin had a little exodus as well. But there has been some selling. World Liberty Finance, there's a lot of holders.
What they do to Circle? What were they holding on Circle?
Well, you're talking about the stock. Yeah, that got cleaned out today. I think the Circle stock is going to be fine. You know how the stock market runs, though. Yeah, I think you broke up on us. There you go.
I bet a lot of that was the Trumps.
Yeah, I think so too. You think? See, that's the thing, bro.
Yeah, right. We don't know.
That's the thing. This is why Elizabeth Warren, all these guys they're coming up with this language that's in the market structure bill. It's gonna basically make it illegal for congressmen and our senators and any political leader, even the president, or even anything linked to the president, because we see a lot of insider trading right now. Every Friday over the weekend, there's insider trading. We just saw it over the weekend. So they're gonna make that. They're gonna make that illegal.
Horrendous.
Yeah, it's crazy. It's ridiculous. So they're going to put a stop to that. So, these crypto players that are congressmen or any type of political leaders, you better get your money while you can, because this new language is going to shut it all down. I've read that. It's shutting all that in stocks too. They're not going to be able to actually insider trade with stocks. They're talking to all the senators and all the congressmen, House senators, political leaders, cabinet members. If you are in any way attached to anything political, or you can't partake in the stocks. You can't partake in crypto. You can't build blockchain technology. You can't launch a stablecoin. It's going to be illegal. And I like that. So let's get into this, because this is what was actually, brought up. Now, the core rule, and this is, you want to do it in plain English, right? This is, the yield was the problem. Okay. The banks are actually looking at this new language right now as we speak. So we don't know if they're going to say yay or nay when it comes to this, but they have the last word. Crypto committee is like, let's go. So Brian Armstrong has been very quiet. Have you noticed? He hadn't tweeted about this because he's okay with this. Brad Garlinghouse, they don't give a shit. They're good. They have the bank charter. They're going to put RLUSD on a silver platter, and they're going to allow, they'll be able to set their own yield. So they're not even worried about this. They've just been sitting back eating popcorn. This is what's banned. Now, you cannot earn, and I'm talking the actual language. This is what has been banned. And this is, a lot of people are saying this is what the banks wanted. You cannot earn yield by just holding. All right. Like Coinbase has it set up now. You can't just buy USDC and hold it in the wallet and get yield. The banks are like, no, we can't do that. You're going to kill us. All our account holders are going to run to you. They're going to leave us. This was the retort. This is what they're basically, they were crying about. Totally get it. It will kill banking. LMFG. They were not lying. If this was allowed, especially to actually bleed over into the real world, it would kill banking. It really would. And the bank's not going to go for that. So they was like, we need a compromise. So here's the compromise. No sitting idle, yield bearing stablecoin in your wallet. No passive interest. It cannot act like a bank account. This is it. So that was struck out. This is what everybody's pissed off about X. But there's more. It didn't go away. It wasn't extinguished. It has been repackaged, and we're going to get into the new package. So what's allowed is a platform that can actually pay rewards only if you're actively using this as stablecoin or, DeFi token, because there's synthetic versions as well, not just stablecoins that actually, garner yield. Those are going to be illegal as well, unless they're actively being used in the protocol. We'll get into those examples because I actually love it. This is what you call evolving the system and evolving DeFi. This is the evolutionary pattern, and sometimes it sucks. It's different. People don't like change, but I think you're going to love it because you're already used to it. And I'll get to that in a minute. So the platforms going forward, and I'm 50-50 on the passage LMFG, but this is what they're going to have to allow activity in order to give you yield by using, stable coins, right? A specific way. It has to be, designated activity. All right. The reward must be directly tied to not only activity, but actual placement as well. Okay. So it can be a SEC wallet. It can be a DeFi wallet. You can just be, holding this in a decentralized finance application like most people do when they're getting yield. They have these synthetic variants that go to their DeFi wallet, and that's just your ticket. Okay. We don't even know what that is categorized as, LMFG. We got our digital asset categorization, but those synthetic variants were not mentioned. So we don't know if those are securities. They're part of a financial instrument. I believe those are going to be deemed securities going forward. Some type of amendment is probably going to go through. So, which is very interesting. So the bill explicitly lists examples. And here they are: loyalty programs, promotions, subscriptions and transactions, payments, and platform usage. Now you see this in the real world, and we're going to get into this. Before we go forward, what's your take so far? Were you expecting this? Is this familiar?
Yeah, I think it leaves it open for so much. There's going to be constant amendments over the next few years, guys.
Oh, you betcha. You betcha.
It's so wide open. The language ain't right. What happens to Lido?
Yeah, absolutely. A lot of these decentralized applications are going to have to pop the hood and recalibrate. I don't think it disappears, but I think, you know what? It just depends on the dev team. It just depends on how solid and how grounded they really are. And if they really fucking care. That's what it boils down to. Because they're going to have to KYC, and they're going to have to docs, and they're going to have monthly audits.
They're going to have to spend funds. They're going to have to spend a lot of money. The accountants, lawyers, they have to have all this, books, everything looking good. And
absolutely.
I don't know.
Only the real ones stand up. Only the real dev teams stand up. Those are the only ones that are going to be able to function and actually operate under this language. And by the way, you're going to have to be permitted too as well. They're not telling you that. That's in the language.
You're going to have to be licensed.
Yeah. You're going to have to, it's going to have to be a realistic situation for you guys. This is what real adoption looks like. They're going to have to be permitted as well. So, and I love it. I love it. So here's these examples are going to be so familiar to you guys. Now, real world examples that will be copied and pasted because they're not going to draw like unique rules. I guarantee you. These congressmen, especially these regulation groups, the SEC, CFTC, Treasury Board, they're so lazy. They're not going to actually draw up fresh rules. They're going to copy and paste, which I like because we are used to these reward systems. We already use them. You know, Capital One, you got a Capital One card, you're going to really understand these reward systems and how they're going to use these and copy and paste these into the activity-based reward system that they're going to put into our space. And a lot of this is just going to merge into the real world. Okay. You're going to notice these. Now, number one, cash back and spending activity. You know this very well. Okay. This is going to be part of the rules. Okay. Now, let's just say you use your crypto debit card to buy coffee with USDC or Bitcoin, whatever. You can do this with Coinbase card. You instantly get 1% to 2% cash back in the real world at this point in time. Just imagine you're going to get that back in USDC or points or a said altcoin, whatever you choose. Okay. This is what's happening. This is what's going to happen. So when I tell you yield is not going anywhere, it really isn't. It's just going to be repackaged. Okay.
How smart was MasterCard starting the crypto partner program? And I believe there's 60 or 70 of them already lined up with them. Every project, you're going to be there, you're going to have a credit card.
Yep.
I see that coming. Every
you see it
single
coming,
one.
Yeah.
I brought that up to Brian. I said, I don't know if you guys are looking into this. And he said that they're already doing it.
There you go.
Okay. And he said, yep, we're already on it. And I said, dear man, get on that
there
shit
you go.
quick.
Let's see. Gert is,
I believe I did some. Yeah. American Express is doing some crypto cards too.
Yeah. Oh, hell yeah, bro.
They're all going to come. Yeah. It was smart of MasterCard jumping on that real quick.
You know, I think there are 60 chains in. They got the infrastructure already, bro. And you were right. The one blockchain is not going to be able to do this. Everybody's going to have to work in unison, which is beautiful for investors that have multiple blockchain coins in their portfolio. Beautiful. Man, this is a great time to be in this space right now. So
crypto ETF funds are going to be beautiful.
Oh my God. The ETFs are going to freaking explode once the post language. You know, we're finally going to get those baskets. Now, Gert said something interesting. He said that if it does pass in the US, the European, the EU may just, you know, completely destroy it. I think they have their own version. I think Micah's good. You know, I don't think they're going to adopt it either, Gert. I think you're right. I think there's going to be and that's an interesting point. There may be a fracture there. There may be two different, you know, languages that, you know, developers are going to have to deal with if they're going for maximum exposure. If they're trying to get a global appeal for their ecosystem, that's going to be interesting to tread, you know, in that way when you have a bifurcated regulatory system. That's going to be weird. But let's get back to this, because real world examples, when it comes to ruling, when it comes to getting yield in this repackaged format, we talked about the number one that most of you use to cash back and spending. Okay. Someone says the petrodollar has collapsed. Yeah. We're gonna stick it with the Clarity Act, because that's a whole nother video. But Selmo is not good, brother. But okay, so we talked about cash back and spending. You guys already know how that looks when it comes to those rewards. When you use your debit cards and you get these 1% to 2% cash backs or points or things of that nature, you see that accumulate. A lot of you love that. Well, that's going to be one of the actual ways you're going to be able to get yield with your said, you know, stablecoin activity. When they talk about allowed and it has to be activity based, this is one of the actual examples. This is what's not being explained. Okay. Oh, on X, everybody's saying, oh, no yield, everything the crypto market is doomed. No, this language is actually pretty bullish. So number two, here's another way you're going to be able to get yield. I love the diversity. Loyalty programs on exchanges or applications. So we're talking about sex and decentralized applications. You're still going to be able to get that yield. Now, here's an example. You send 10 USDC transfers or make a 5 swap interval per month. This is what you're doing per month. That's activity, right? That's based activity. This is what they're wanting. This is a new package. This is a new animal of yield. Let's say you're doing that on Coinbase or a similar platform or DeFi platform. You earn a bonus USDC or platform token as a loyalty reward per your activity. So that 10 USDC transfer or 5 swaps per month, maybe that's going to be the minimum that requires the distribution of the loyalty reward, which could be the stable coin or any type of protocol token that you choose. All right. Now, why would this be allowed? It's based on your transaction volume or frequency. It's not an idle balance. Again, I'll pass it to you. Here's the second way that you're going to be able to get yield. Yield is not going away, LMFG. There's 2 more options too. The loyalty platform and then that's going to be embedded in the exchanges and the applications. That's a real world activity. We have that in the real world. They're just going to copy and paste this in. What's your take on that? So we got cashback spending rewards, and that's tied to payments and transactions. You basically using your, stablecoin card or whatever. And then loyalty programs as well when you're dealing with exchanges and decentralized applications. Just basic usage, guys. That's already 2 ways you're going to be getting yield. Let's say your activity is off the charts within those exchanges and those apps, and you're using your card profusely like we always do our debit cards in real world activity. You could find yourself accumulating a lot of stable coins within as rewards, way more than you would if you were just holding it and getting 4%. You see where I'm going with this, LMFG?
Sure. Do I? I got a Gemini XRP card. I'm already got a 200 XRP so far in rewards.
Mm-hmm.
And I could change it to Bitcoin, Ethereum, whatever I want. You know what I mean? Yeah. And I've only gotten this thing, maybe 5 months ago, 4 or 5 months ago.
Yeah.
But I actually had a real hard time with them. I tried setting my wife up underneath my account. That didn't work. Tried to get her own account. That didn't work. I opened up tickets with them, had problems. Can't get the login. It takes them 2-3 days to get back to me. So I'm not happy with it there. But everything else is fine. Yeah. And then I could actually go into advance and I can do trading on there as well. I can buy and sell crypto on the Gemini itself. So. But the rewards, rock and roll. Yeah,
and it's very familiar. Most of you already know these first two. You know these very well, especially, and I think it's very interesting. And I think this would be advantageous because a lot of users that are coming, out of their traditional banking systems and they're coming in, they're going to understand this is going to be very familiar. Cashback, rewards, and loyalty programs. It's going to be very familiar to them. And I'm telling you guys, I stack a lot. These two, use them a lot, and I find myself accumulating a lot of cash very quickly because I use my debit card profusely, just like you all do in real world. And the loyalty programs, they kick in. You already see that on DeFi apps at this point. But I think this is great. I think we're just on number 2. This is way better than just holding USDC in your wallet and getting 4%. You'll be able to accumulate way more. And see, this is why this is so bullish, because if the banks go for this, I'm going to laugh my ass off if they go for this, because I think the way it is now is better for them because it's a capped yield. It's capped. These are so many different ways that we'll be able to accumulate yield. I think a lot of people are going to be looking at this outside and they're going to be like, yeah, this makes me want to leave my bank even more because there's more ways that I can accumulate stablecoin rewards and things of that nature. And the stable coins, especially USDC, is just like a dollar. And I don't care if the dollar collapses. You can always pair this with a commodity basket. You can pair it with gold. This is what Paxos is doing with Tether. Paxos is doing with their tokenized commodities with gold. I think they have a tokenized silver too as well. But who cares if the dollar collapses? That can be the best thing because we could absolutely move to metals, commodities, to back Bitcoin, to back these stable coins. You know what I mean? Don't be fearful about the dollar collapse. And that would actually be a great occurrence.
You'll be able to get gold and silver rewards.
Absolutely. Yeah. We really, I'm telling you, like Selmo said, it's a petrodollar. I'll let that sink in. We need to move forward because listen, crypto and block, we need to move forward because there's bigger and better things on the horizon. Not only for the US, not only for crypto, but for the world. And I think we're going there very, very fast. So we're going to get into the third one. I want to get into some comments too, because I see you, sir. Soshio says the minimums would probably be where they get us. Yeah, because they're going to be some minimums, man, like the ones I mentioned earlier. That's going to, like a minimum 5, swaps per month. I think we're going to be able to achieve that. I think most people achieve 5 swaps per month. I could be wrong. I know I do. I'm way above that. When it comes to using your debit card, everybody's going to, achieve that type of usage. So I think the number one, that number one example is going to be achievable. But you're right, sir. I'm going to get to the rest of your comment here. Says other exchanges will have that similar thing, like when they want you to pay a fee for a credit card or earn cash back as a higher rate or something like that. Yeah. I think that term is going to be actually used. This is the term I think they're going to come up with because they're going to be able to generate more fees under this new language. They're going to call it blockchain service fees. I'm going to guarantee you. You got to see that in the fine print, blockchain service fees coming up real quick. And these protocols are going to make way more money under this language, guys. What Coinbase, the actual fees they're making off of just allowing you to hold that stable coin, this new language, if they put these different options in it to where you can, this new package on yield, they're going to 10x their actual income with this. And I think this is why Brian Armstrong is very quiet, because they know this is bullish.
I just told my son you might want to go get a Fidelity account and grab some Circle.
I'm telling you, that Circle deal is
100 or something. Does it hit 90 or something? I'm not sure. I'll go check.
Yeah, but that dip is crazy. It's going to get bought up because it's going to be very bullish. This is why, because Brian Armstrong has been very against the banks, and their actual retort. But he's very quiet right now because he knows this is a great language for not only Coinbase, because they'll be able to structure, they're going to be able to tinker and adjust some things to where they'll be able to still offer rewards, but it's going to be activity based. It's like we're telling you, and that Coinbase card that all of you probably, I know I have mine, that's going to be I think I'm going to start using that thing post language way more than I do, because my Lord, I can't wait for this to pass. So let's get into the other examples, because DeFi platform activity is number 3. Okay. We're talking about activity-based yield bearing situations. This is what's going to be allowed, right? You're not going to be able to just hold and sit. The third example is going to be DeFi platform activity. Now, most of you guys in the space, you already do this. And if you don't, Brian talks about this a lot for the fam that's in the chat. We know this very well. Okay. We're talking about liquidity providing. This is another way you're going to be able to get that yield. And this is pretty standard. We know about this, but a lot of the outsiders that don't deal, or partake in DeFi, they don't really know about this, but this is going to be expedited. This is going to be, you're going to get even more rewards under this particular language, because this is a third example of what's going to be allowed as activity-based yield, occurrence. Now, let's say you actively provide liquidity in a USDC, USDT pool in a DEX for about a day, right? You're actually trading and supplying liquidity. This is the activity that's going to be needed to garner those rewards going forward, the yield. And we already know this. We already partake in this. This is something not new at all. So you earn a small activity bonus or a fee share on the top for the actual trading that is involved. Most of you know about. We call it farming. It's the old school term for this is farming. Why is it going to be allowed? Why is it activity based? The reward for the engaging or the actual providing of liquidity within the protocol is the actual activity. It's not just parked in your wallet. And this is what the banks do not want. So you got trading going on, you have lending, and you have swapping going on with that liquidity that's being provided within the stablecoin pool. This is something we already do. This is going to be the actual third example and the third option. And then this is going to be the third rule, guys. I guarantee you, bookmark it. Cashback spending, loyalty programs under the exchanges and the actual DeFi apps, and DeFi platform activity. Okay. This is the easy part for us. We already do this. I think a lot of people are going to be getting rewards based on cashback and spending, with payments and transactions with the stablecoin cards. And this type of language is going to actually send the stablecoin card activity skyrocketing. Everybody's going to get these cards now. Everybody's the Coinbase card is probably going to go off the charts. You're going to see a Ripple card, which they already have. You talked about it, LMFG, Gemini card. All these cards are going to start just flying off the shelves because it's going to be an easy way to get stablecoin yield. And of course, loyalty programs are going to be actually applied to those cards as well. So you can combine number 1 and number 2 together, actually. Pretty interesting. Number 4, we'll stop at number 4. So I can go on and on with these examples, but I think these are the top 4. Subscription or promotional based perks. This is something we actually do as well in the real world. This is very easy to bring this into the rules. They're just going to copy and paste this, guys. They're not making it up because this is so easy for them to do this. The SEC, the CFTC, Treasury Group, it's so easy for them to just move these into this space and be done with it. This is how they're going to get this passed by April, LMFG, because if they waste time trying to draw up new rules, we're not getting that bill this year. And Donald wants this now. Now, I have issues with Donald signing this because of the association with USD1. It's going to kill that yield that's going on right now on the World Liberty Finance platform. Lots of fees are being generated right now. post language, those fees are going to go away. They're going to have to implement these new rules. So we'll see how that works. I believe he's still going to sign it because I think he's going to need the crypto. He's going to need that crypto vote. He's going to need that crypto support. So I believe he's going to sign this. And I think it's bullish. Number 4, let's get to this. Let's say you pay a monthly subscription fee on a crypto payments application using stablecoins, right? You get an extra USDC credit or promotional reward each month for that activity, or just staying active on that said program, or staying actively subscribed to that particular platform. This is why it's allowed, because it's tied to an ongoing platform usage and subscription activity. So when it comes to active or activity based yield, this is what we're talking about. This is what they're not telling you on X. Yield is not going anywhere. It's actually getting better under this language. It's more robust. You're going to be able to generate even more stablecoins within your wallet this way. And there's usage. And it's not just stablecoin yield. You're going to be able to generate token yield. You'll be able to pick. Maybe you don't want USDC or USDT. Maybe you want to generate some Bitcoin. Maybe you already see this with fintech, with the cashback rewards on the Coinbase card. You can pick which,
right.
You know what I'm saying? It's already existing, right?
A little note in there. I'm in the middle of taxes, right? And having a hard time is real. I put in all the wallets into Coinly, and I've had issues with this over the years, but it's usually nominal. I got so many issues this year. It's crazy. My thing is, I'm thinking about this. So I got these rewards, 200 of them, right? And sometimes they were given to me when XRP was at $2, now at $1.40, right? Yeah. Well, I hold it for 5 years. I go to sell it. I'm getting capital gains tax.
Yeah, there you go.
How's that going to work? Think about that, right? Because it was given to me at $1.40. Now I sell it at $5. That's a capital gain.
No, you're right. And see, this is another part. I'm gonna go ahead, brother.
I see Sir Shields put a note in there, said they're gonna figure out somehow they're gonna be in our pocket.
See this.
You watch.
No, he's right. Sir Shields is right. He's right.
Yeah, he's right.
Yeah. I'll read these comments. So Gur says, a few years ago, Binance removed their debit card under separate rules, and we never got a new one. Yeah, absolutely. But see, Binance when they did that, Gur, Binance was going through some issues. Big time issues. I think Gary Gensler was actually after that ass during those times. So they were trying to figure it out. I think you're going to see that card come back, especially post language, because it's going to be beneficial for SECs to bring those cards back. I think every SEC, I don't know, Kraken's going to bring theirs back. I did see something about that. I think Kraken is going to make it resurge. They're going to be one of the biggest ones, especially on the state side. When it comes to this, they're going to benefit a lot.
I bet they all have. If they don't have the applications into the OCC are ready to become a bank charter, they're working on it. They're waiting for the language.
No, absolutely. And there's a lot of platforms too, decentralized finance platforms that are just waiting on this to pass, and they're going to go absolutely bonkers. A lot of these blockchain, like Algorand, a lot of these ecosystems that everybody's like pissed off about because they're just not moving price wise. And they feel like everything is done, everything is hit a wall. No, they're just waiting on language, man. Because a lot of these platforms, look at what the rules, look at the actual package of yield, the new package that they're going to pass. It's going to allow these platforms that are already built for this shit. And a lot of these platforms were built 4 years ago. You have to understand. A lot of these RWA and tokenized facilitators, they were built 4 years ago. They're flatline and people are like, they're bullshit. No price moving, price this, price that. They've been waiting on this for years. And once this language, once they get clarity, they're going to explode with activity, with usership, especially with this new yield package. I'm telling you guys, a lot of the devs were ahead of the game. Now, you may say that, we can say that they put the carriage before the horse, but I think it was smart because they're already set up. They don't have to catch up, LMFG. They're already set up. So when the floodgates are open, they're going to be ready to catch all of that. Now, listen, man. And I think that's the way you're supposed to build. Now, I'm not saying these guys were seers. A lot of them kind of threw the dice on the board. They kind of rolled the dice, and some went the wrong way with their tech. Some went the right way. Some people say a lot of the tech that I'm talking about is too slow. Not so much. Okay, so, and I've been reading a lot about Solana too. Everybody's really pissed off about Solana. Well, Solana's going to be okay, but Solana's going to have to adjust themselves because you can't survive on memes alone. So I think with the tokenized race coming up, RWA race coming up, I think Solana is going to be able to pivot especially when it comes to tokenized stocks. You've seen what the NASDAQ has approved. So I think Solana is going to be able, I just want to throw that in. So LMFG, this is essentially what we're looking at when it comes to the Clarity Act, when it comes to these stable coins, when it comes to the yield. This is where we're going. The centralized exchanges, everybody was saying they're going to go away. DeFi is going to take over. Not so much, not so fast. The SECs are actually going to thrive under this language. DeFi is going to have to alter some things. You know, these applications are going to be treated as crypto companies. I think that was actually brought over from MICA, from the European language. So we call them decentralized applications. Nah, under the language, you're a company. Under the language, you're a company, guys. You're going to be audited. You're going to have some AML. Okay. There's going to be a monthly oversight. That's going to suck for a lot of the devs, and they're going to run away from it. But the real devs are going to stand up and they're going to be like, okay, let's go. Let's go. We're ready. We've been ready for it. We don't care. Bring the KYC, bring the AML, bring the doxing. Let's take the pictures. Let's show them who we really are. They're ready. They're ready for it. So they're going to shine. These protocols are going to shine. What's your take, bro? Because, and here's a little contrast before I get your last take on this, before we move to some news here. Holding the actual USDC and, just to round this up for 4% yield, that's over, guys. That's done. Now, as far as the decentralized finance applications that are doing this, because you have some phenomenal yield in a lot of DeFi applications, double-digit yield on a lot of these stablecoins we're talking about. They're going to have to regulate themselves. Those DApps are going to have to be regulated. Those devs that have launched those DApps and that are doing maintenance and managing those protocols are going to have to. There's going to have to be some AML now. There's going to have to be some accountability within these protocols now, right? Oversight, okay? Doxing. There's going to have to be some accountability, This is what's going to happen within this arena. And then when I tell you DeFi is going to have to alter some things, you're going to have to pop the hood, reconfigure, just to be compliant. Not joking. That's what's going to happen. So it's not going to kill DeFi like a lot of influencers are saying or X. It's not going to kill it. I think it's going to make it more robust, more secure, and more safe. Not only for us, normies, but for the newbies that come in. They're going to be able to actually, be able to accept this and be able to trust it post language. And there's going to be accountability. There's going to have to be some type of deposit insurance too, especially with these ones that are doing the bank charters. LMFG, this is where we're going. This is what adoption looks like. So the days of keeping 10,000 USDC in a SEC and getting $400 per year, those days are over. You're going to have to work for it. There's going to have to be some type of activity like I explained before. Any structure that looks, and here's a big sentence here. Any structured situation that looks like a bank deposit would no longer have these loopholes involved. It's a no-go for that. So this compromises why both the banks and crypto groups are calling it imperfect but workable, unquote. LMFG, what's your ending take on this?
I'd really love to see the whole bill and be able to read it myself. Because my thing is, and how long before it goes? So, because you got to think about staking rewards too.
Now
you're supporting the network. However, these politicians, there'll be an amendment coming down the road. If it's not in there now, it's coming.
Right. Well, you bring up a great point, and that has not been addressed. Staking rewards.
We're hearing about what the banks are pissed off about. We're not hearing about the other 100 amendments on this bill. You know what I mean?
Right.
When it came out, there's so many lines. There's been, and it may not be 100, but it's, I think, like over 50 amendments over the last 2 years that have been added to this thing.
Yeah, don't forget the Genius Act has amendments coming to as well.
Yeah, yep. And then think about the next few years, this is going to keep getting tweaked and fought, and you'll probably even wind up in courts over some stuff. See it coming.
Yep. No, you're right. I think what we're seeing here with the Clarity Act, with this particular language so far with the yield. This was the big monkey. This was the one that was holding the build up. As far as the other thing, I think there's some consensus there. I think there's some agreements there. This actual Clarity Act markup that's probably going to pass was a bipartisan measure. So it was equally agreed to. So this is why I think it's going to pass. And it's very bullish. Your rewards are not going anywhere. It's just being repackaged. And I think under this new language, you're going to be able to generate even more rewards. And I think it's going to make that actual crypto card, is what I like to call it, the cryptocurrency debit card, is going to make it even more advantageous for you to use it. And I think it's going to make it more attractive. And I think this is what the space needs. We need those cards to actually function in the real world. This is what's going to bring that massive exposure over. Okay. And the banks are, they haven't responded. I don't see anything on X when it comes to the banks actually responding to this, but they're looking this over. So I'm trying to find any news on any type of response when it comes to the banking committee, and I just don't see it. So I don't know if that's good or bad. I really don't. Gur says, would rewards in stablecoins be different to staking? See, let's talk about this because you brought this up, LMFG. I believe this is my opinion about it. When you're staking in a protocol, you actually, especially if you're doing node staking, if you are delegating and things of that nature, because there's different categories of staking. Some people stake, or delegate, right? I think that's activity. I think that falls under the lines of activity. You're not just blatantly just leaving something in the wallet, just generating yield with no activity, with no, when there's energy applied, there's always a result. So I feel like that staking activity, that's providing security, especially proof of stake. You're actively doing something with those particular tokens, right? So I believe under this language, from what I've read so far, from the actual scattered activity and from the examples that I've given, I think it falls up under those rules that I believe they're going to copy and paste, which I totally believe what I just read you. That's going to be the rules. Staking rewards will be allowed because you are actively providing a service. You're giving up you're providing a backbone for proof of stake, right? So if they make that illegal, what do you think what happens to proof of stake? Think about it. If they make that a non-issue, then there's nothing to worry about. But if they come out and say, well, staking rewards are, we can't have that. What do you think that's going to do to the proof of stake consensus? Because that's what that's all about.
Yeah, and like I said, and like Cersei, you'll still figure out a way to get in there. It's true because when you're staking, you're supporting that network.
Mm-hmm. It's activity. Yeah,
that's the consensus of the network. You're securing that network, whether it be for speed, whatever it's doing. So we'll see. I don't trust them. They're going to go after it somehow or another. The politicians. Hey, I'm gonna step off for about 2 minutes. I'll be right back.
Yeah, we're about to wrap it up. We're gonna do the giveaway in a minute, but I will tell you this. I know some breaking news on the Middle East situation, which I hope this is true. It says Trump says Iran gave the U.S. a big present, gas and oil related. This is quote. Trump's been saying a lot of weird shit, but quote, they gave us a big present worth a tremendous amount of money. It arrived today. It was oil and gas related. We are dealing with the right people, unquote. So, man, I hope this is not a lie. If we can get everything calmed down in the Middle East, there's a lot of infrastructure that's already been destroyed. But if we can stop it, the quicker the better. So we can rebuild that and then we can get these markets back stabilized. So that's some good news. So hopefully that is, it's not a lie. It's not more manipulation. But back to the Clear Deck. I think this is absolutely tremendously bullish. This particular language, I think they're going to copy and paste a lot of what I've told you as rules. It makes a whole lot of sense. And I think this is going to be advantageous for you, especially if you already have one of these crypto cards, if you have a Coinbase card, if you have a Gemini card. I think these are going to be sought after going forward because those cards are going to be generating a lot of rewards, man. We're talking stablecoin rewards, crypto rewards, because everything is going to be routed towards activity. The main thing is the banks do not want us to be able to just put large amounts of money on Coinbase or on Kraken or Binance and just be able to get yield for nothing. They feel that as a threat and it's going to cause their account holders to migrate to crypto, to DeFi, and they're going to lose out. As far as I'm concerned, a lot of the banks are already insolvent. I don't think this is going to help them. I think a lot of the banks are going to go under, guys, and the banking system is going to be consolidated. It's not going to be a lot of them left. So the ones that are going to be left, I don't think they have anything to worry about because they're going to be institutional based. Large institutions are going to be left. These small regional outfits are going to they're going to go under because they're underwater. A lot of debt, a lot of mortgage debt, a lot of loan debt, a lot of private credit debt, a lot of consumer debt wrapped up into these these regional institutions. They're going to fall. So it's going to be a very small financial network. Within the next 5 years, you'll see that dwindling down. This is where DeFi shines, because I think DeFi is going to grow. It's not going to shrink with it. It's going to grow because people are going to come in and see all these advantageous events that are happening, especially when it comes to this new language. And they're going to be like, you know what? I'm getting this measly yield in this banking institution. I'm going to go over and get some of these rewards. Okay. I'm going to provide some liquidity. I'm going to get me a debit card, a crypto debit card, and I'm going to use it so I can get some rewards. Because when you're getting these altcoin rewards, we all know they occur value. They're not stagnant like a dollar or a stablecoin. Let's say you bought something with your credit card and you pick Bitcoin, or you picked Ethereum or Solana or Monad as a reward. And the next day that thing goes, it just skyrockets 10x, does a 10x. Your stablecoin is going to still be a nominal value of a dollar, or whatever it's pegged to. But that particular reward, if it's Monad or if it's Bitcoin, it's going to move up in value. This is what's cool about this. You have that option going forward, and it's going to be legal. So I think the language is bullish. I love it. And there's more to it than just a yield. You know, it's going to add a value of security that we don't have right now when it comes to these decentralized finance applications. It's still wild, wild west. You know, we see these applications get hit all the time. Well, post language, they're going to have to provide a level of not only doxing, a high level doxing when it comes to the team, but on anti-money laundering is going to have to be in place. Reserves, some type of backup, right? As far as deposit insurance or any type of insurance related to your actual monies involved with these applications, that is to be determined. And I think that's the next argument that's coming up. The FDIC will not touch crypto at this point in time, but post language, what I'm seeing here, maybe they may think about this twice, because I think that's the icing on the cake, especially when it comes to massive exposure. If we can get the FDIC to come in and say, okay, we like this. This seems to be safe. If we can get AML, if we can get these devs docs, if we can get formal oversight, monthly audits, maybe we will insure these deposits. Maybe we may think about actually building, not using the existent model, but kind of constructing something that's more feasible for the crypto space, for decentralized applications, for centralized exchanges, to where we may not be able to provide what we do on a normal basis when it comes to brick and mortar, but maybe we can figure something out to where we can insure these people in our crypto space. I think that's what's coming. And I think that's why I love this.
That's not going to be easy.
Yeah, I know. But they're going to have to go. They're going to have to do something, bro, because the banks, the financial system is about to shrink. It's going to be consolidated. It can't exist as is. Right.
You have to have pullback capabilities then.
No, absolutely. Absolutely. But I think they can do it, LMFG. I think they can do it.
I think we're going to wind up with a whole nother insurance, like a whole nother realm.
Another
of
entity. Yeah.
Yeah. And it may even be where you're going to start seeing these AIGs, these big insurance companies, start buying these auditing companies.
Yeah. Yeah.
Right. Because you if you're going to insure, you're going to want your own audit. You're not going to rely to, oh, yeah, we audited it. It's all good. Yeah, bye. I don't know. We'll see. I think it's going to be a vast market. I really do.
Yeah, very interesting. Very interesting. So, this is I'm very happy about what's going on. And again, I'm with you on that. I think the FDIC, they're going to have to. They're not going to have a choice, because this shit is about to explode. Usership adoption, real world is about to merge in, and they're going to have to fall in step. Now, we don't expect you to, insure put $250,000 worth of insurance on every deposit. Hell no. I don't expect that. That's not feasible, because the space is so volatile. I don't think they would even be able to do that. But we need some form of, protection. I think it's needed, and I think the actual accountability when it comes to these protocols, validating and actually reporting, backups, especially with the yield bearing, with the ones that are actually really, really, gathering and managing large amounts of money. like Ava, we need to make sure your protocol is straight, and that oversight is going to come, whether they like it or not. So I think this is great. I'm seeing some very bullish news when it comes to the Middle East. We just don't know if it's true, because Trump is saying some very bullish things, but on the other end, Iran is saying something totally different. So we don't know what the hell is going on. There's a lot of give and take here. So with that being said, some of the news that I'm seeing here, when it comes, you got a Bitcoin proposal that's coming up that's really shaking the hornet's nest. It's an anti-spam proposal, and it's supposed to knock out inscriptions and all that extra curricular activity that's been going on within the transactions on the Bitcoin network. It's going to kill that token standard. A lot of people aren't really happy about that. It's the Bitcoin improvement proposal 110. Check it out if you get a chance. So BlackRock CEO wants to move stocks and ETFs into crypto wallets. Did you see that? I thought that was pretty interesting. I don't know if you caught that, LMFG. So
yeah, I did. Rock and roll.
I think that's pretty cool. But, again, there's issues with user experiences. Listen, if this goes through, if stocks and ETFs are going to be actually embedded in MetaMask and Phantom, we know how crazy that can get. And a lot of people lose a lot of money because they click the wrong links. They get involved with signage. They leave their wallets, connected to these exchanges without disconnecting them after using them. And this is how people get wrapped up into losing all their funds. Can you imagine somebody losing their ETF, signatures and losing stocks, not just meme coins? So, we need protection there. I like it, but then I don't like it because it's so easy to get caught up, with these DeFi wallets if you don't know what you're doing, especially when you're connecting them to these situations. So going forward, there's going to be a lot of things that are going to change, right? So this is cool, That's pretty much it. Not a lot of things. It's all geopolitics right now is what I'm saying, guys. All geopolitics. It's all Trump right now. Laura Loomer is coming out saying some very scary stuff. I don't even want to repeat that out loud. I don't even want to speak that into fruition. We'll move past Laura Loomer. But LMFG, I don't know if you're seeing anything. There's some interesting Kalashi prediction market activity going on with Bitcoin dropping down to $48,000. Did you see that? High percentage is what they're saying.
No, I didn't.
That would be catastrophic for the altcoins. And meanwhile, by the way, let's go ahead and switch to that before we move. $69,000, guys, for Bitcoin. It's still holding. Altcoin season, everybody's freaking out about this too. We got a 50 score. I wouldn't be looking for an altcoin season this year, guys. I just wouldn't. But everybody's getting jumpy around this particular score. We're even right now. We're kind of slightly into the altcoin season feel when it comes to numbers. LMFG, you got to take on this, or will we see an all season? I don't think we will. What's your take?
I think some of the ones that are going to be all compliant with this Clarity Act and have no issues and start rocking, those will take off. Okay. For all the other ones, I don't know. There's so much. I think we're going to see a lot of consolidation once all these laws get in there. It's going to be too much, Yeah. And like I said, you're still going to need 20, 30 chains. Who knows? Who knows what this thing looks like in 5, even 10 years from now. We'll see. Got a lot of changes coming. That's for sure.
A lot, man. It just depends on which dev team is going to actually take the initiative.
It's not just the the politics of it and the laws, but it's the technology itself. I believe blockchain is going to change a lot of things, and it's going to be tweaked as we go. It's quite impressive technology. It's wild.
Yeah, I will say this.
And stuff, and your proof of history, proof of stake, proof of authority. I mean, proof of time. It really is pretty sharp.
Yeah.
Very impressed.
So before we get to the giveaway, I will say this. Actually, I want to go. Let's talk about the stock market because I want to show you some things, guys. So we were talking about this LMFG, and we're looking at kind of a correction here. NASDAQ down almost 200 points. Dow Jones 84 points down. S&P 500 21 points down. Now I want to really log on, the futures aren't looking too good. So, Trump is very bullish, but I think the market is tired of the lies. And once the market figures out that the politicians are lying and that there's some manipulation going on, once money figures it out, money just, money gives you the middle finger and it says, you know what, you can go stick it. We're out of here. And this is what you're seeing. The bullish news that I'm seeing, that Trump is really trying to put bullish news out there. It's not working. It's not working anymore. The market is getting tired of the lies. So, and you can see that in the market. Mag 7's down big time. Big time. I'm talking all of them down. Futures are not looking very well. And this is the early, put on the futures. But when I'm looking at the commodities, Brent oil back over $100 right now. I'm rounding it up. It's 99.71 right now. Crude, you have crude WTI. It's getting pretty close to $92 again. So the oil market is not surrendering to the manipulation anymore. I think both are going to be over $100. And the bond market is going bananas. 10-year is up almost 2%. There's your mortgage rates going up to 7% this year, guys. I guarantee you. You're going to be over 7.5 by the fourth quarter. No one's buying homes at that rate. I'm sorry. And the HELOCs, if you did a HELOC, God bless you. 30-year is up almost 60.
I'm at 3.2 or something, 3.3, I forget.
No, you're lucky. You're good. Yeah, don't touch it. Don't touch it. Why would anybody refinance right now? You got to be a complete idiot. Unless you're just, I don't know. God bless you. So,
you're in an emergency, you need cash, you do what you got to do.
You got to do. That's what I pulled back on it. I was like, you know what? God bless you. You got to do what you got to do. You're right. I'm not going to go to her. People got to do what they got to do. But man, it is a bad time to do it. My Lord. And I want to send prayers to the builders. You were told to build. You were told to buy land, build as many homes as you can, and you were screwed. You were screwed. My prayers to you.
My father bought a house at, I think it was 17.5%. Imagine that, a 30-year mortgage.
Yeah,
back in the 70s, I think it was.
Hell, I remember when it was 2.5. I remember those days. Hell, I remember when it was really close to zero. I definitely remember the good days. So we're going to get this giveaway, guys. I hope you guys enjoy the short. We're going to be getting more member content out too. I hope you got my message, Olivia. She asked about that, and I'm going to get some more content out to you guys. We're going to spin this wheel for some cash. All you have to do is interact with the member content, and that puts you on a wheel. I'm getting 3 winners today. We're going to give out some soul. So, and just, well, we'll go to that after the giveaway. I want to show you something about the cost of war. It's getting really, really crazy, bro. Let's go ahead and spin it. Well, hold on. Let me make sure I got everybody. I don't leave anybody off. I'm going to do a final roll call, and we'll get this going. Hang tight, guys. Now, I think we're good. All right, let's go ahead and spin it. So I'm gonna go ahead and call it. Crypto Priest, hadn't seen him win in a while. Crypto Priest 9613. This is what it looks like, and I think I'm right. Crypto Priest, all I need is your soul wallet, brother. Crypto Priest 9613 is gonna be the first one. Let's go ahead and get another winner element. We need two more. Let's go. We're giving out Solana. I want to switch, but I think everybody likes Solana, so I'm gonna leave it alone. It's fast too. It's one thing good about Solana. It gets the rewards out pretty quick. And Tim Shea. It's between Tim and Olivia. Let's see who wins. All right, so we got Tim Shea. Welcome to the winners group. It's been a while, brother. So you know what we need, brother. We just need that soul address. Tim and what was it? Crypto Priest. So let's get one more. And again, all you have to do is become a member, interact with the member content, leave a comment, and that's your ticket to get on the wheel. LMFG. We almost got you. So it looks like Raul. And a lot of these 3 I haven't seen on the wheel in a long time. So this is really, really cool to see Raul, Tim, and a Crypto Priest win today. I hadn't seen you guys in a while. So let's go ahead and do the recap. So we got Crypto Priest 9613. Hand clap to you, brother. We got Tim Shea Crypto. Hand clap to Tim Shea. Everybody knows Tim. And to wrap it up, we got Raul DJ1SK. What is up to you guys? All I need is that soul address. LMFG, I'm gonna let you take it out, brother. And I'm gonna put this up here. This is how much the war is costing. We're almost at 30 trillion and counting. All right. We got 200 troops wounded. Yeah. A billion. I'm sorry. Oh my God. Did I say trillion? I bet you that scared the crap out of a lot of people. No, guys. It's not 29 trillion. Yeah, that would be, that would be crazy. Let's go ahead and round it up. 30 billion. All right. 24 days in 16 hours, 11 minutes and 43 seconds. 13 killed, 200 wounded. Iranian military today that was killed, over 5,000. God bless their souls. On both sides. Rest the souls. The souls are eternal. Iranian civilians, guys, 1,500 plus killed. Over 20,000 Iranians, civilians, innocents. And don't forget those girls too. Rest their souls, wounded. So this is bad. This needs to stop, LMFG. Your take on the market and ending results, what do you have to say, brother? That kind of hit me right there. There's a lot of people that have perished. Yeah,
that's horrible, man. I don't know. I say hold. I say this is going to still dip. I'm seeing Bitcoin 60K.
Yeah.
Let's see what happens. I think some numbers come out this week, and the rate ain't getting dropped. And like you said, it may get increased.
I think he's going to increase the rates. You're right. Maybe 25 basis points.
One more meeting, and then I think there's a skip. And then the new guy, and he's not sworn in yet. And so they can push that down the road. And I don't know what happens. Does Powell stay as acting, or does Trump nominate an acting? I'm not sure how that works. So we'll find out, I guess.
Well, there's still a threat of... No, absolutely, brother. But think about this, brother. There's still a threat of martial law, too. People tend to forget that. If everything really goes left, there's still that threat, too. And the president can do some crazy stuff during those times. So let's hope we don't get there to where there's martial law. And we're under attack by space meteors, too. I don't know if you guys have noticed, but the country is getting hit with a lot of meteors, a lot of large ones, too. So some say I was talking to a guy that was very, very much into what's going on, and he was telling me that the planet is actually in front of the debris field of 3i Atlas. You remember that? You remember the 3i Atlas situation? They don't talk about it, but it's still an issue. And that debris field, we're actually in front of it, which is kind of baffled me. It's like, I thought we were behind it. I thought that thing already passed, but apparently we're not in a good spot. So that could explain all these meteors and all this space stuff that's hitting the planet right now. We're like part of the debris field of that 3i Atlas, That's not good in LMFG. We know that there's some small pieces, there are some medium pieces, and within these debris fields, there can be some pretty large rocks. So hopefully we're good, man. I don't know, but I just want to put that out there. If you've been in any areas that have seen these meteors, these space rocks that have hit the planet, very large ones as well, just be careful out there, right? Keep your head on a swivel. And I'm going to read what Laura Alumer is saying before we get out of here. This is just an awareness. The only reason why I'm doing this is just to get the awareness out. Now, this is the actual headline. It says breaking. Let me put her up here. Laura Alumer is predicting that many Americans will perish in a soon-to-be terrorist attack that will be 10 times worse than 9/11. This is what she's saying. This is what this lady just said. This just broke. What does she know? I don't know, but I'll let that stew. And with that being said, this is a hell of a way to sign off. But with that being said, guys, have a good one. Be careful with your wallet. The scammers are still out there. And I think this new Clarity Act markup, it's bullish. It's going to send this space skyrocketing. We just need it to pass, right? So with that being said, have a good one, and we'll see you guys on the next show.